Well, hello everybody, welcome back to another Forex market analysis session. My name is Alexander Nikitin, I am a professional trader and a programmer as well. If you guys are new, what I'm doing here, I'm looking at some good opportunities that may happen next days, as well as I'm explaining some aspects of technical analysis or psychology as trading. If you guys are following me for a while, thank you for your support, thank you for your thumbs ups, thank you that you share this video on social media. This work is very valuable for me. I appreciate it. Thank you once again. Continue that. Well, let us start. Today I'm going to analyze Euro Yen. As usual, I start from my higher time frame, which is daily, and then I go to my lower time frames to find some reasons for entry. Okay, it all starts from the knowledge on how to read the price chart. And let's read it. What we see on the daily. Actually, on daily, I am to identify what price is doing now and what price is most likely to do next. Right now, I'm drawing those swings to the downside. Yes, we have a series of lower lows followed by lower highs. And look at this movement that happened in the bottom of that. We had a movement to the downside, then we had an outside return, and then we had a retest. So why it is a retest? Because this movement is long enough to touch at least the lowest close of the previous impulse leg. You see this impulse leg, its close is this much high, yes, but even if you take this close as the lowest close, this movement touches that. So this is called a retest, and the whole formation is called a double bottom. Even if you don't have them absolutely equal, these points, this is a double bottom because the spike of that touches the lowest close of the previous. Okay, double bottoms are the first signs of reversal. If you have double bottom, it is the first sign of reversal. This doesn't mean that you are going to trade it to the upside immediately. You need a confirmation. So the confirmation will be the violation of that double bottoms neckline. This shows you a confirmation to the upside. So we have this zigzagging movement, but still we didn't violate the first initial point of the previous downside movement. So we're still actually in a correction mode as compared to this previous impulse leg to the downside. So until we break that, we don't have an uptrend. Okay, let's have a look at this. What happens here? This range, I will mark it with rectangle. This swing to the upside. We have outside return to the downside, to the upside, to the downside, to the upside, and to the downside, and then we finally break it this way, go into the outside. So what was this consolidating period? Because it took place within the previous impulse range, it was a correction. It is a complex correction or compound correction or outside return, complex pullback, whatever you call it. It was a correction. It wasn't any trend consolidation, it was a correction. So this second violating movement now confirms an uptrend installed. Now you should understand we had first violation of that double tops neckline, and then we had second violation of this. Now we have a series of higher highs followed by higher lows, inverted. Plus we violated the initial point of the previous impulse. Okay, as we have an uptrend installed, we are only going to trade to the upside. How can we get involved into that upside movement? Can we buy it right now from here? Well, price may easily go this and then it goes this. Can we buy it from here? Well, price may easily go this and then it goes to the upside. You see, it will be all valid outside return, and we will have an upside bias all within this range. So whatever movement within this range take place, it will be all called a pullback as compared to previous impulse leg. So you should keep it in mind, an uptrend may start from here, or from here. Well, it doesn't really matter. So within this large range of previous impulse, we have to find some evidence of potential buyers stepping in. We have to find some level where buyers may step in. This is called thinking like other traders. Okay, where potential buyers may step in. Look at the structure first. This acted as resistance, then we had this spike. It is very indicative spike. We had a good pressure to the downside, and then we had the same pressure to the upside. Well, and it acted as support here as well. If we go a bit to the history, yes, a bit lower to the left into the history, we will find the same level acting as support, resistance as well. Okay, let's continue then. So we have this level. What other confirmations? Some structure trading traders may step in here. Yes, if we stretch our Fibonacci from swing low to swing high. Yes, and let me enable 382. It is here. It coincides with this level. So other traders that are trading 382 may step in here as well. Okay, let me zoom it a bit. Not this way, let me do it this way. Okay, pay attention to this minor swings. This way, this, and finally this. Oh, no, I don't need this one. Okay, if you copy and paste this, yes, you will see it terminates somewhere within this zone. If we draw this leg this way, yes, copy and paste it as well, we will have it terminated actually at the same zone. It doesn't give us any exact numbers, but it gives a zone. Okay, let me leave it on a chart, those zones. Let me mark them with a horizontal line. The first one is here, the termination of that, and the second one is here. It should be this way. So we have some lines confluence, and let me delete them as we don't need it. Okay, zoom it out. It's time to switch to our trading time frame. The first one is 4-hour time frame. Not very much things here. Let's stretch some Fibonacci retracements from this to this, and let me enable 786. 786 lines up with that level. Yes, we'll disable 382. Okay, let me do some Fibonacci inversions and some Fibonacci extensions. If we have this leg extended, we will see what level we see here. Not 161A, 1414, no, 127. 127 is good, lining up with that level as well. Let me measure some inversion, taking this from this and back again. So we have another 127 lining up at this level. Let me measure some other extension from here to here and back again. Not 127, maybe 1414, no, 161A, a golden mean ratio, 161A lining up at this level as well. And let me invert this leg from here to here and back again. 161A is too high. Let me enable 2. 2, well, yes, 2 is okay. So actually I have built this tiny zone. Now it is not as wide as we had on daily, and it looks pretty reasonable to pay attention to this zone to find some reasons for entry here. It doesn't matter what are your reasons for entry. You may be entering using double bottoms, you may be entering using the high and higher close principle, or if you are an advanced pattern trader, you may use an advanced pattern trading setups. Let me switch to 1 hour, and I will give you some minutes to find an advanced pattern formation that is hidden on this chart. Hope everybody found that formation already. Let me delete those lines this way. Let me put this rectangle back. It was somewhere here. It doesn't really matter. The actual entry is that advanced pattern formation entry, at least for me. Okay, what are advanced pattern formations start from? We first need an XA leg. An XA leg should be either an impulse leg or an anchor leg. What is an impulse leg? This is the movement that is mostly straight without very deep retracements within. What are those very deep retracements? If you measure it from swing low to swing high, and then you enable 382 this way, yes, and then you measure that 382 range, something like this, yes. So just drag this range and measure this movement. Do we have any retracements that are at this large? No, we don't have any. We have some minor that obviously smaller than this range. So this is called the movement is straight. We don't have any large retracements. So what else? The second thing that it should violate some structure level, and we see here we're violating these highs, yes. A valid XA leg. Well, and it mostly contains green candles and less red candles. So of course we see it containing more green candles than less candles. Okay, so these are the three items, three features of the valid XA leg. Should be an impulse leg, should not have a very deep retracement incorporated, and it should violate some structure. Okay, if we have this valid leg, it all starts from an XA leg. If you cannot identify that XA leg, well, you will not identify a correct pattern. You will find some crap and it won't be a valid pattern. If the XA leg is correct, then the sequence of Fibonacci's makes sense. Okay, so the first Fibonacci that we are looking at is a 50% retracement. If we have a 50% retracement hit, this is a bad pattern. You see, this 50% retracement was hit. Okay, next we measure this movement to the downside, and it should hit at least 382, and it should not touch this high. So obviously we have this 382 and not touching this high. Okay, we have two criteria met. If these two criteria are met, then we stretch our fibs once again, measure our XA leg, and enable 886 retracement. So this 886 retracement, we have a completion of the pattern, and this pattern is called a bad advanced formation. Next, A to B. If we use our triangles, we will see this pattern. Okay, so this is a termination of this pattern. If price goes to the downside, there is a very high probability that it will move to the upside and hit these levels. let me enable these levels of targets. 382 and 618. We have a higher probability of price to move this way after it hits this level than to move lower. We have higher probability. Do you understand what this means? So this is the setup for today, guys. If this is very complicated for you, you may do it the way I am doing it. Let me delete that. Let me close that trading view. Okay, you see my MetaTrader. So this is my daily chart. I am to find some good zones on this chart, and I use fractal zone indicator. This is the indicator I coded myself, and it draws the zones. So we have a valid support zone here that is forming. If price goes lower, it's better to buy at this zone. And if we switch to 1 hour time frame, we can find some patterns as well. Let me do it this way. I just run my scanner and it draws the pattern. It draws the entry, take profit 1 and take profit 2, and it also draws a stop loss. Okay, we should ignore this pattern like that. Because it terminates in no man's land. Yes, no higher time frame coincidence, something like this. We can delete them all, and we can leave only the bad pattern formation that is valid. Okay, hope you like this video. If so, give me your thumbs up, share this video on social media. Until then, good luck, good trading, hope to see you soon.